Read the title of the Ind AS 20. Tell me, what is the accounting standard that it reminds you of? Right, the accounting standard that you must have studied at the earlier level. If you see the title, it says Ind AS 20, Accounting for Government Grants. Accounting for Government Grants, that's also the title of Accounting Standard 12, right? And there's one more thing which is there in Ind AS 20, and they are saying, and disclosures of government assistance. Accounting for government grants and disclosures of government assistance, that is the subject matter that we will be covering in this particular Ind AS. A lot of parallel to a certain extent can definitely be drawn between Ind AS 20 and Accounting Standard 12. Quite a bit of treatment that we were doing under AS 12 is also getting repeated in Ind AS 20. To that extent, understanding this accounting standard will not be that difficult. I personally consider this to be a simple accounting standard. If you are very much aware about the requirements of Accounting Standard 12, you will not have much issue understanding Ind AS 20. First and foremost, yes, we will like to understand what is covered by Ind AS 20 and what is not covered by Ind AS 20. We check with the scope of Ind AS 20. Ind AS 20 should be applied for accounting and disclosures of government grants and disclosure of other forms of government assistance. Actually, government grant also at the end of the day is a government assistance, but many a times the government assistance is such that we are not able to put an exact figure on it. Then in such a situation, you will provide simply a disclosure. But if there is any transfer of resources from the government to the entity, then we will consider that as a government grant, and the government grant has to be properly accounted and disclosed in our financial statements. That will remain the scope of Ind AS 20. What is outside the scope of Ind AS 20? Okay. Ind AS 20 does not deal with these 4 items. Okay. These 4 items are outside the scope of Ind AS 20. Let's understand that. The first one is you start the accounting of the government grants and there are certain inflationary pressures. Now for hyperinflation, we are having a separate Ind AS, but that Ind AS is not a part of our syllabus, so we will not be studying that. But Ind AS 20 does not cover those accounting issues. Accounting issues which are arising on account of inflationary pressures in the economy, those accounting issues relating to government grants, Ind AS 20 does not include that. It says the special problems arising in accounting for government grants and financial statements reflecting the effects of changing prices or in supplementary information of a similar nature. Inflation is increasing by so and so rate, you are receiving a government grant, certain accounting issues will arise. Those accounting issues are not covered by Ind AS 20. Second, government assistance that is provided for an entity in the form of benefits that are available in determining taxable profit or loss or are determined limited on the basis of the income tax liability. Okay. Any government assistance which will ultimately become a part of your computation of taxable income, that will also not be covered by Ind AS 20. For example, the government in its budget is declaring or announcing a tax holiday. You are in a particular industry and a tax holiday period is granted for that particular industry. Now, as you can see here, you are definitely getting some form of government assistance, but this government assistance of the tax holiday is something that will become a part of you determining your taxable income. Such kind of government assistance or government grants will not be covered by Ind AS 20. Let us say the government is declaring for certain industries that if you are investing in certain capital goods, then accelerated depreciation will be available to you. If the normal rate of depreciation is 15%, for you 30% depreciation will be available. But please make fresh investments in capital assets. This is also one kind of government assistance only, because if I'm investing in capital assets, if I'm expanding my production capacity, then I will enjoy this taxation benefit. This is a government assistance, but it will be outside the scope of Ind AS 20. Third one is government participation in the ownership of the entity. This is not covered by Ind AS 20. For example, the government is investing 20% in your company. 20% of your shares are acquired by government. The idea is to infuse capital in your company. Here, as you can see, government is participating in the ownership of the entity. It will not be covered by Ind AS 20. You are going to issue equity instruments. Accounting of equity instruments is carried out by applying the Ind AS relating to financial instruments, right? Ind AS 109, Ind AS 32 will take care of the same. And finally, 4, government grants that are going to be covered by Ind AS 41, agriculture. Agriculture also has requirements of government grants. We will follow Ind AS 41 for those kinds of government grants. They are outside the scope of Ind AS 20. As we've already seen, what is there in the scope of Ind AS 20 is the accounting of the government grants and the disclosure for government assistance. I will like to know what are their meanings. What do we mean by government grant? After all, in the title you are saying accounting for government grant. I want to know what do we mean by government grant. Then they are saying disclosure of government assistance. I will like to know what is government assistance. This is what is going to be covered by Ind AS 20. Yeah, we first check with the meanings. I will like to know the meaning of government grant. I will like to know the meaning of the government assistance. First of all, let's check with government grants. Government grants are assistance by government. Just see, here also I'm using the word government assistance. Okay. In the definition of government grant itself, we are saying that it is assistance by the government. But what more is happening? In the form of transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. If all the 3 elements are present, we can say it is a government grant. First of all, it is an assistance that you are getting from government. Not necessarily the assistance should only be in cash. It can even be in kind. Okay, you are getting assistance from the government. What kind of assistance? In form of transfer of resources, right? Resource can be cash which has been transferred to you. Resource can also be a non-monetary asset that has been transferred to you, right? It can be anything in the form of resources to an entity. Question is why? Why is the government giving us this kind of resources? Because you have already fulfilled certain conditions in the past, or you are promising the government that we will fulfill certain conditions in future. Okay, and the assistance has to be relating to the operating activities of the entity. If all the 3 elements are present, it's a government grant. Accounting of government grant will be then considered as per the provisions of Ind AS 20. Right? Let us say a government has introduced a scheme for a particular backward district. Let's take an example of Gujarat, right? Gujarat is a highly developed state, but still there are certain districts which are backward. Hence, the state government is announcing certain scheme for the overall development of the state. Certain backward districts are required to be developed. The government wants that some industry is setting up its plants in that backward district. And hence the state government is coming up with a scheme that, see, if you are starting some industry in this particular area, then 20% of your capital assets, 30% of your capital assets, that will be contributed by the government. In other words, if the cost of the project is turning out to be, let us say 10 crores, then 30%, let us say 3 crores of cash will be given by the government. Or the government may make land available to you at a very concessional rate. See, there are different ways in which the government can assist us. But here what is happening is there is transfer of resources, right? Cash is getting transferred to you, or some land is getting transferred to you, or maybe some another asset is getting transferred to you. Question is why? Because you are ready to develop an industry in a backward district. In other words, there are certain conditions over here. Apart from this, a lot many other conditions will be there. You have to fulfill all those conditions. If you are ready to fulfill those conditions, only then and then you will become eligible for the government grant. Hence, what they are saying is that either the conditions are already fulfilled in the past, or the conditions will be fulfilled in future. And finally, the grant is with respect to the operating activities of the entity. Right, I will set up an industrial unit. That's nothing but an operating activity for me, for which I will receive certain assistance from the government. If there is any transfer of resources, then that is what becomes a government grant. You get my point? Government is assisting you, but there is no transfer of resources. Then it will be simply understood as government assistance. Then it will not become a government grant. For government assistance to be classified or understood to be as government grant, transfer of resources to the entity is absolutely a must. And then of course they are saying that follow the treatment given in Ind AS 20 for accounting of the resources transferred by the government to the entity. That's the subject matter of Ind AS 20, that if ultimately I come to a conclusion that it is a government grant, then how exactly the government grant shall be accounted for. Okay. As you can observe in this definition itself, we are saying that government grants are assistance by government. That's the next thing that I want to know. What do I mean by government assistance? Okay. They say, we read this now. Government assistance is action by government designed to provide an economic benefit specific to an entity or a range of entities qualifying under certain criteria. You know, there is some kind of benefit that the government wants to provide to the industry that it is trying to develop further. Okay, for example, right now we know that the pharma sector requires the highest amount of investment. That's where the government can definitely provide assistance. Government can announce what can be popularly known as a pharma policy. So many times the government does come out with a policy which is targeting a certain industry. Let us say the infrastructure industry. The government can announce certain infrastructure plans that if this is the kind of investments that you are ready to do, then so and so kind of assistance will be available. For example, the government wants that certain small and medium-sized companies are getting higher benefit. And that is the reason it can design one entire scheme for them. That so and so projects, let's say for example, infrastructure, for so and so projects, only small and medium companies can bid. Large companies cannot bid for it. The government wants to ensure that small and medium scale industry are getting certain contracts so that that industry can survive. You know, this is nothing but one kind of government assistance that we are getting. Let us say China is dumping its goods in India. Let us say the toy industry, right? It is dumping its toys in India. Indigenously manufactured toys are not being purchased because the ultimate selling price of those toys is higher, while China is able to manage it because they are in a position to sell the same toy at a lower rate. What the government does, it all of a sudden announces a higher custom duty on toys which are imported from China. This increases the selling price of those toys, and that is how it is trying to protect the Indian toy manufacturers. This is also one kind of assistance that you are getting from the government. But what distinguishes a government grant and government assistance is, in government grant there is a transfer of resources, while here there is no transfer of resources. Because of that custom duty, if I am a toy manufacturer in India, I have got benefited. But how much benefit I really got, that you cannot accurately predict. I will simply say that government assisted me, that government designed a scheme to protect my interest. That is what all I can really say. But in order to record some accounting entries, I require a one-on-one relationship between the government grant and the resources that have been transferred to me. That will not happen in normal government assistance. I will acknowledge the fact that because of the central government policies, a particular industry was saved. I can definitely acknowledge as a company in a particular industry that yes, I have benefited on account of this particular scheme, and this scheme will run for another 5 years. So for another 5 years also, I will go enjoy that benefit, isn't it? Similarly, we have something known as a startup policy, where the government is trying to incubate a lot many startups. All these are schemes from the government. All of them are nothing but government assistance. But if you are not getting any direct transfer of resources from the government, it will remain only assistance. It will not become a government grant. That's the reason I am saying again and again. Here the word assistance by government is there. That means government grant is nothing but a part of government assistance only. But what distinguishes a government grant is transfer of resources. Yes, what to do over here? Here, what you should do is you should provide suitable disclosure. Provide suitable disclosure to give an indication of the extent to which the entity has benefited from such assistance during the reporting period. Right, I can definitely say in my notes to the financial statements that, see, because the government levied higher customs duty on certain products, my sales has increased. I can say that this is government assistance. I will also say that this customs duty which has been say inflicted on foreign manufactured goods, this scheme will perhaps continue only for a few more years. That means this benefit will be available to you, but only for few more years. Getting it? Or you're a small and medium-sized company, and because of some government scheme, you have been able to win certain bids. You can definitely disclose this in your notes. You can say that because we were a small and medium-sized company, we have taken benefit of so-and-so government scheme, and because of that, so-and-so contracts have been awarded to us, and this scheme will continue for another 3 years. Getting it? So what will happen is anyone who is reading the financial statements will be able to understand that, okay, because of this scheme, so-and-so benefits were available. It will be available only for the next 3 years. After that, we do not know whether that benefit will be available or not. Readers of the financial statement will be able to carry out a far more meaningful interpretation if these disclosures are provided. That's the reason they say this facilitates comparison of an entity's financial statements with those of prior periods and with those of other entities. In the prior periods, I was not getting this government assistance. In current year and few more years, I will get this government assistance. This fact should definitely be disclosed in notes to accounts. It is an important information that the readers of financial statements can definitely use to bring about a meaningful projection of your future performance. Okay, we are saying government grants, government assistance. We continuously use the word government. The question that arises is that what exactly is a government, right? What do you mean by government? That's what they say. They say government refers to government. Okay, they say government refers to government. Look at the definition. Government refers to government. What we normally understand as government, obviously that is the government over here. It is also including government agencies. It is also including similar bodies, whether local, national, or international. Right? The government, that is the central government, is designing a scheme. State government is designing a scheme. Local municipality is designing a scheme, right? Doesn't matter. It can be local, national, it can even be international, right? Similarly, government agencies and similar bodies, they will all be understood as government. Any transfer of resources from them is a government grant. Any scheme announced by them because of which you are getting benefited, we will consider that as government assistance. Government assistance needs to be disclosed, but if the government assistance is ultimately resulting into transfer of resources to the entity, then it becomes a government grant, and the government grant has to be adequately accounted for. Let us understand now that what shall be the accounting treatment of the government grants. Okay. We are taking into consideration the recognition of the monetary government grants. Earlier in the definition of government grant itself, we had understood that government is normally providing you a grant because certain conditions were fulfilled by the entity in the past, or certain conditions will be fulfilled by the entity in future. But what if you are receiving a grant with no conditions attached at all? It is an unconditional grant. If you are receiving an unconditional grant, the grant that you have received should be immediately recognized as an income in your statement of profit and loss. Just credit it to the P&L. Let us say there is a government scheme that for so and so purpose, we are ready to give you 1 lakh rupees. Okay. After you receive 1 lakh, there are no conditions that you are supposed to fulfill. Okay. If I am receiving this kind of an unconditional grant, I will recognize it immediately in profit or loss. No need to defer it. Let's say you are receiving 1 lakh rupees, credit entire 1 lakh rupees to your P&L. When if the government grant is unconditional. But this is normally very rare. Government grants are usually conditional grants. Either you have fulfilled the conditions in the past, or you are promising that you will fulfill conditions in future. Okay. These conditional grants, they can be relating to assets or they can be relating to income. Let us understand one after the other. And if you remember accounting standard 12, you will not have any problem understanding this particular portion, right? In accounting standard 12, if you remember, if you are getting a grant relating to government grant relating to an asset, you have two approaches: capital approach and deferred income approach. I hope you remember that, right? Exactly the same is there in Ind AS 20. Okay, actually, to be very honest, AS 12 is giving you the accounting treatment which is there in the International Accounting Standard. But because you have studied AS 12 first, that's the reason I am saying that the requirements of AS 12 and Ind AS 20 are the same. To be fair enough, these are the requirements of IAS 20 and AS 12 has borrowed from IAS 20. Okay, that is the reason. What happens is our accounting treatments are remaining the same. Capital approach, income approach, both the approaches are given in Ind AS 20. Of course, the more preferred approach is the income approach. Okay, Ind AS 20 says that you should follow the deferred income approach, but if you wish, you can also follow the capital approach. Alternatively, they are saying the other approach can also be followed. Okay, you are getting a government grant relating to the asset. This asset can be depreciable asset or it can be non-depreciable asset. Accordingly, we want to know that how the accounting will be carried out. Let us say in a backward district, if you are investing 1 rupee in capital assets, the government is ready to give you 30 paise. In other words, you are investing in capital assets. Let us assume for a moment that you are investing in capital assets 10 lakhs of rupees. And as per the government scheme, okay, the government grant is going to be 30%. Let's say you are getting a government grant of 3 lakhs. Question is what to do with this 3 lakhs of rupees. Okay, this 3 lakhs will be treated as a deferred income. You will say it is a deferred government grant. Your accounting entry for 3 lakhs will be bank account debit to deferred government grant account, or you can say to deferred income account, 3 lakhs of rupees. These capital assets are depreciable. Okay, find out what is the useful economic life. We realize that the useful economic life is 10 years. So you know what will happen? This 3 lakhs will not immediately go to the P&L. It is not an unconditional loan. Okay, unconditional grant. Okay, it is a conditional. Unconditional grant, entire 3 lakhs will go to the P&L. Okay, the moment you are receiving it, let it go to the P&L. But here you are getting a government grant which is conditional. You will get this grant only if you are setting up an industrial unit in a backward area. Right? Backward area, that's the condition which has been laid down by the government, and that's the reason I will say it is a conditional grant. I am going to invest 10 lakhs of rupees in capital assets. As per the government scheme, I will get 30% of it, which is 3 lakhs. Question arises, what should I do with this 3 lakhs of rupees? This government grant of 3 lakhs, how should I account for it? You should treat the government grant received as a deferred income. And then over the useful life of the capital asset, you should take transfers to the P&L. Because this is a depreciable asset, we will take transfers in the ratio of depreciation. For example, if you are going to depreciate your assets on straight line basis, then this 3 lakhs will be recognized on straight line basis over the useful life of 10 years. 3 lakhs divided by 10, every year recognize 30,000 rupees. My first accounting entry will be bank account debit to deferred income, 3 lakhs, 3 lakhs. When the year will come to an end, I will say deferred income account debit 30,000 to profit and loss account 30,000. I will take transfers to the P&L. That means I will take a credit to the P&L in the ratio of depreciation. If you are following the WDV method, then for the next 10 years, project what will be the WDV depreciation. This will give you a ratio. In that proportion, you should recognize the government grant. Getting it? The second approach that is possible is record the capital assets in your books at a net figure. What I will do this time is I'll say 10 lakhs. From this, I will deduct the government grant and I will record the capital assets in my balance sheet at 7 lakhs. Getting it? The government grant can alternatively be deducted from the cost of the asset. And then whatever is the net amount, on the net amount you will provide for the depreciation. Comfortable? Okay. Let us say for establishing the plant, you are supposed to buy land. Government is contributing 30% of the cost of land. Okay, this is also a government grant relating to asset. However, land is an asset that cannot be depreciated. You know, here I am saying that 3 lakhs of rupees I will take to the P&L in the proportion of depreciation. Fine. But if I am getting a government grant for land, there will be no depreciation. And if there is no depreciation, then how will I take the transfers? What to do now? Ind AS 20 says that even though the asset is not depreciable, still you have to treat it as a deferred income. Still you have to take transfers to the P&L. Now they are saying that you have to take transfers on some systematic basis. Okay. Earlier the systematic base was depreciation, but if the asset is such that it cannot be depreciated, you have to find out some another systematic base, and in that ratio you should recognize the government grant over a period of time to your P&L. So we are discussing with related to assets, depreciable and non-depreciable. Please understand it. They are saying recognize in profit or loss over the period and in the proportion in which depreciation expense on those assets is recognized. Okay, you have got the government grant with respect to assets which are depreciable. Find out what is the useful economic life, and over that period in the ratio of depreciation recognize the government grant in the profit and loss account. But what if the asset is non-depreciable? Again, recognize in profit or loss over the period that bear the cost of meeting the obligations. Getting it? So you are getting a government grant for acquisition of land. Land is a non-depreciable asset. I will not get a ratio of depreciation to amortize the government grant. That's the reason they are saying that first treat the government grant as a deferred income and then take transfers to the P&L. Question is how? You have to develop a systematic base for the same, right? We are leaving it to the management of the company. Find out that if you are receiving this kind of a government grant, for how many years are you going to enjoy this particular benefit? If you come to the conclusion, I will enjoy this benefit for 5 years, then over the next 5 years, develop some systematic base and recognize the government grant in your P&L. Although it is not given in Ind AS 20, but I will just add to it that if no systematic base is available, you will have to go for straight line method. Simple, isn't it? If you are not getting any clear-cut method, Ind AS 20 says that you should do it for the period when you are bearing the cost of meeting the obligation. Getting it? But you are not in a position to accurately project what those costs will be, what those benefits will be, then you can follow straight line method. It's not given in Ind AS 20. I am saying this because this is how a systematic base can be developed. Or, right, alternate treatment, or deduct the value of grant from cost of the asset and charge depreciation if applicable on the reduced value, right? If the asset is depreciable, then whatever is the difference on that you charge depreciation. If it is non-depreciable, then forget it. For example, you are getting government grant for a land and I want to follow the alternate approach. What will I do? Whatever grant I have received, I will deduct it from the cost of the land and then I will show land at the net cost. But then yes, further there will be no provision for depreciation. But if it is a depreciable asset, let's say an item of PPE, from the cost of the PPE, I will deduct the government grant. Whatever is the net cost, because it's an item of PPE, it is depreciable. That net cost will be depreciated by me. Okay. So two approaches, very much like accounting standard 12, income approach, or I will rather say deferred income approach. Under that particular approach, whatever government grant that you are receiving, you will first defer it. You will not allow the entire grant to get credited to the P&L. You will take transfers from the government grant to the P&L. Take transfers means on a systematic basis over a certain say period of time, I will take credit from the deferred income to the P&L. In other words, I will recognize income out of the government grant, not entirely in the period in which it is receivable, but over a period of time. And you have to follow some systematic base. What can be the systematic base? For a depreciable asset, the systematic base is depreciation. For other assets, you as a management has to decide what that systematic base is going to be. Yes, conditional grants can also be related to income. What does that mean? Related to income. There might be certain expenses which the government is ready to compensate. Okay, that's what we call as a government grant related to income. Let us say certain salaries that you are paying. A part of that salary is going to be borne by the government. Let's say it's an elaborate government scheme. You establish a, what I can say, an industrial unit in a backward district. Then they are saying that whatever employment that you are providing, 30% of the employment or 20% of the employment has to be given to localites, people who are living around that particular area. 20%, those people have to be employed. And then the government further says that for those people who are locally employed, 50% of the salary, let's say 60% of the salary, will be borne by the government for the next 5 years. Basically, it is nothing but a part of the government scheme only. In other words, this is a salary expense which ultimately is going to be borne by the government to a certain extent. That's where I say this is a government grant relating to income. What will we do? Again, two choices over here. Whatever government grant that you are receiving as a compensation for the expense that you have already incurred, that government grant can be credited to the P&L as it is, or you can show it as a part of your other income. Okay. Another possibility is that the government grant can be deducted from the expense and only the net expense is reported in our P&L. Two choices. Let us say the salary expense is 10 lakhs and as per the government scheme, I am getting government grant of 3 lakhs of rupees. Possibility number one, credit 3 lakhs to your P&L. Possibility number two, credit 3 lakhs to the P&L but making it a part of other income. Okay. See, in both the cases, 3 lakhs is getting credit to the P&L only, but one way is that you show it separately. Another way is you make it a part of other income. And the second alternate way is that your cost is 10 lakhs, government grant is 3 lakhs. Instead of debiting 10 lakhs of salary to the P&L, 10 lakhs minus 3 lakhs, debit 7 lakhs of rupees to your P&L. These are the two ways in which the government grant related to income can be presented in our financial statements. Yes, they are saying presented as a part of profit or loss, either separately or under a general heading such as other income. Either show it separately. You can say government grant received or make it a part of other income. Or, right, they've used the word or here, or alternatively, they are deducted in reporting the related expense. Simple. Related expense, I will show it on net basis. Yeah, what we discussed till now, you can definitely find parallels with respect to that in our accounting standard 12. But now we are going to discuss something which is exclusively a part of Ind AS 20. We don't have these issues in accounting standard 12. And this is what will basically increase the scope of Ind AS 20. There are certain specific types of government grants, which I am referring as special government grants, and we will like to know that how those government grants are going to be treated. There are 5 elements over here, and that is what we'll be discussing one after the other. The first one is with respect to a forgivable loan. Okay, what is a forgivable loan? The government gives you a loan and the government does not expect you to repay that particular loan, right? That is what we can understand as a forgivable loan. For example, there is some natural disaster, natural calamity in certain area, and the government is wanting to provide some kind of assistance. You know, again, it wants to ensure that the economic activities in that particular area commence. But people are not having the necessary resources, the necessary money to again invest and restart the economic activities. That's where the government announces a plan that everyone whose shop was destroyed or everyone whose businesses have been affected, so and so amount of loan will be available from the government. The government is saying that we are going to provide you a credit of, let us say, 10 lakhs of rupees. But please start with the business. Okay. So a credit of 10 lakhs is available to us. This 10 lakhs, basically the government is saying is a loan. But when I receive that loan as a business person, I'm inquiring that at what rate of interest will I have to pay? The government says it is interest free. Great. When am I supposed to repay this particular loan? The government says no need to repay it. It is a forgivable loan. Only thing is certain conditions will definitely be attached. Okay. The government will say that, see, we are giving you 10 lakhs, not that because you have to now spend that 10 lakhs on your son's or daughter's marriage. No, we are not giving you 10 lakhs for that. Okay. We are giving you a forgivable loan only for restarting your business. This is the condition that you need to fulfill. And this business also you have to restart at the same place where you were originally doing the business. Certain conditions are there. If we are expecting that the entity will fulfill those conditions, then this forgivable loan is nothing but a kind of government assistance. There is transfer of resources over here, so it will definitely become a government grant. Okay, how will the government grant be treated? Of course, the government grant will be ultimately taken to the profit and loss account over a period of time on some systematic basis. Getting it? You have to work out some systematic base, and on the basis of that, you are supposed to recognize the government grant in your P&L. So if I just discuss the forgivable loan, they are saying for forgivable loan that, see, it is treated as a government grant when there is reasonable assurance that the entity will meet the terms for forgiveness of the loan. Okay, the loan is available free of cost. The loan is available without any obligation of repaying it. It is a government grant. But are you going to fulfill those conditions? Do you have that assurance from the entity? If the answer is yes, then it is a government grant. How to treat this government grant? Yes, here it is. Recognize in profit or loss on a systematic basis over a period in which the entity recognizes as expenses the related cost for which the grant is intended to compensate. Again, as you will restart your business, once again you will incur expenses. It is these expenses which the government is planning to reimburse. You have to recognize this in your P&L over a period of time on some systematic base. Systematic base is not available, then you can definitely go for SLM. SLM also at the end of the day is a systematic base only, right? Okay. The second one. Again, a loan is available from the government, but at a concessional rate of interest. And this time the loan is to be repaid also. Okay, so that is the difference between forgivable loan and the point that we are discussing now. Loan at below market rate of interest. If you are going to a bank or a financial institution, you will get a fresh loan. Let's say you are getting a fresh loan at 11%. Government says nothing doing. We will give you loan only at 5%. You are getting a loan from the government at a concessional rate. What to do now? Very interesting over here. You will have to apply the principles of Ind AS 109 over here. Understand? You are getting a loan which ultimately has to be repaid. See, government is giving you concession in interest rate. Government is not saying that you don't have to repay the loan. Loan still has to be repaid. A contractual obligation of delivering cash is nothing but a financial liability, and financial liability is going to be covered by Ind AS relating to financial instruments, right? Ind AS 109, Ind AS 32, Ind AS 107, every Ind AS will become applicable over here. What to do here? Okay, Ind AS 109 suggests that whatever are the cash outflows of this loan, you have to pay interest at 5%, so that is a cash outflow. Ultimately, the loan will be repaid, so that is also a cash outflow. These cash outflows should be discounted at the market rate of interest. In our example, the market rate of interest is 11%. Whatever loan that you are getting from the government, project what will be as cash outflows, discount that at 11% and find out the present value. This present value will be understood as your contractual obligation of delivering cash. In other words, it is the amount of the financial liability. And the total amount that you have received minus what you are going to consider as a loan, that is going to be a government grant. You get my point? Let us say the government is giving you 10 lakhs of rupees at a concessional rate of 5%. I am carrying out the discounting at the market rate of interest and I work out the present value. For simplicity, let's assume that the present value is 7 lakh 50. 7 lakh 50 will be treated as a loan, but the total cash that you received was 10 lakhs. Extra 2 lakh 50 that you have received, this is the government grant. And how to recognize the government grant? On a systematic base over a period of time. Okay, that accounting treatment will remain the same. Loan at a below rate of interest. Yes, what is the further requirement? They say discount the cash outflow of the loan at market rate of interest. The above is the initial carrying value of the loan determined as per Ind AS 109. Excess cash received is government grant. Whatever extra money you received is the government grant. Okay. See, a part of that loan is to be repaid. So you cannot say that you are getting government assistance to that extent. You know, this is the logic over here. The government is giving you 10 lakhs of rupees at a concessional rate. That does not mean 10 lakhs is government grant. A part of that 10 lakhs has to be repaid, isn't it? That's the reason Ind AS 20 says that find out what is the carrying value of the loan, treat it as a financial liability, follow the principles of Ind AS 109 and carry out its accounting. Okay. As per Ind AS 109, this financial liability will be classified as amortized cost, and then an amortized cost schedule will be prepared and you will find out what is the amount of interest expense to be recognized each year, right? You know it very well. If you have done financial instruments, you know it very well. But whatever extra money that you are receiving, consider that as a government grant. And how to account for the government grant? Here it is. Recognize in profit or loss on a systematic basis over a period in which the government grant is intending to compensate you for the expenses that you are incurring. Basically, if the loan is to be repaid, let's say in 5 years, then in 5 years, you will have to recognize the grant in your P&L. Yes, what else? The third one. Grants received as part of a package of financial or fiscal aids with conditions attached. Okay, the government is announcing a package for a particular industry, let us say. In recent times also we have seen that because of the economic activities which are contracting due to the COVID pandemic, from time to time the government is coming out with certain schemes so that some benefit is available, some fiscal package has been announced for the industry that is worst affected by the pandemic. That is the kind of grant that you are going to receive now. Okay. Now this grant that you are receiving, certain grants may be with respect to acquisition of capital assets. Certain grants may be with respect to expenses that it intends to, compensate you for. So that is how the accounting will be required to be done. Whatever grant is relating to the capital assets, follow what we have already discussed earlier for grants related to assets. Whatever grant is towards compensation of expenses, this will be understood as grants related to income. We have already seen how that should be accounted for. When you get government grants as a part of a fiscal package, the segregation of the grant will be necessary. You will have to really understand that how much of this grant is towards assets, how much of it is towards income, and accordingly the accounting is needed to be carried out. Right, they say identify the conditions giving rise to the cost and expenses which determine the period over which the grant will be earned. And here it's important. They say it may be appropriate to allocate part of a grant on one basis and part on another. Getting it? You have to understand what conditions are needed to be fulfilled because it's a package. Understand? When there is a package, there will be different points in that package. Some loan will be, some grant will be towards point number 1, point number 2, point number 3, and so on. Let us say in the package, the government is saying that we are also giving you a forgivable loan of 50,000 rupees. I'll have to treat it on the lines of forgivable loan. In that package, the government is saying that we are also going to give you certain credit, say from the banks, which you have to repay at the market rate, but certain percentage of the interest will be borne by the government. So you are also getting a loan at below market rate. Some grant may be unconditional. I may take it immediately to the P&L. So we have to understand the package. What are the terms of the package? And on the basis of that, we will be able to identify what shall be the right treatment of the government grant. Yeah, the fourth one, they say grant receivable as compensation for expenses or losses already incurred or for immediate financial support with no future related costs. You have already incurred the expense in the past and now you will get the government grant. Or you have suffered some losses and the government is now giving you a loan so that a part of that loss is getting recovered. Or the government is giving you financial support, but read it, with no future related costs. Okay. Looks like an unconditional grant. And if it is an unconditional grant, we know it should be recognized in the profit and loss account. They say, shall be recognized in profit or loss of the period in which it becomes receivable. Provide disclosure to ensure that its effect is clearly understood. I have already debited the expenses to my P&L and now the government is compensating that. I should just credit it to the profit and loss account, isn't it? Or I can just deduct it from the expense. I had suffered a loss in the past and now I am receiving a grant. I'll just credit that to the profit and loss account. Or a grant is received with no future cost. No future cost? It means it is unconditional. I will let it go to the P&L, but provide a proper disclosure so that the readers of the financial statements can understand its impact. Finally, government assistance, no specific relation to the operating activities. Now, when we understood earlier the definition of a government grant, we have made it very clear that government grant is assistance from government. It involves transfer of resources from the government to the entity because of fulfillment of certain conditions, either in the past or in future. Right? And it should be relating to your operating activities. Here I am getting government assistance, but there is no specific relation to the operating activities. Then first you will have to really analyze, is this really becoming a government grant? If yes, then provide a disclosure and also provide the necessary accounting for the same. These kinds of government grants should not be recognized in equity. You may transfer it to capital reserve or you may transfer it to general reserve. No, you cannot do it so. It has to ultimately go to the P&L only. But first you will have to check whether the definition of government grant is getting fulfilled or not. That is what they are saying over here, that first check whether the government assistance meets the definition of government grant. If yes, do not credit directly to shareholders' interest. You may argue that this is not relating to operating activities. And because it is not relating to operating activities, I will not take it to the P&L. I will rather take it to equity. The logic is very sound over here. You may say that the grant is not relating to operating activities. Then why to take it to the P&L? Because P&L is where I will measure my operating performance. No, nothing doing. This grant still has to go to the P&L only. Okay. This grant, here's the arrow, right? They say recognize the profit or loss on systematic basis over the period in which the entity recognizes as expenses the related cost that the grant intends to compensate. Accounting of the government grant shall be still through the profit and loss account. It is not necessary that government grant will be always received in cash. Government grant can also be received in kind. Right, you are getting over here a government grant which is non-monetary in nature. What to do then? For example, let us say the government is giving you certain plant and machinery free of cost. The government is transferring a piece of land in your favor free of cost. You are getting a government grant in kind instead of getting it in cash. All that we were discussing till now were government grants that we were receiving in cash. What if the government grant is in kind? What to do then? Ind AS 20 and of course even our accounting standard 12. Okay, again the treatment is turning out to be the same under AS 12 and Ind AS 20. If you know the treatment of AS 12, you will have no problem in understanding the treatment in Ind AS 20. And in case if you don't remember it now, don't worry. That's what we are going to discuss now. The first possibility is you should recognize the government grant at the fair value of the asset that has been given to you free of cost. For example, there is a piece of land of 1 crore which is given to the entity free of cost. In some backward district, in some backward area, the land is made available to you free of cost. Find out what is the fair value of the land. As I said, fair value of the land is 1 crore. Record an accounting entry. Land account debit 1 crore to deferred government grant account 1 crore. Okay. And then on a systematic basis, take transfers from the government grant to the profit and loss account. You have to recognize the asset as well as the government grant at its fair value. And after that, take systematic transfers from the deferred government grant to your profit and loss account. The other possibility is record the grant and the asset at a nominal value. I am getting land free of cost. I say in my books, land account debit to government grant 1 rupee. Right? At a nominal amount, I am recording the land. That is the another choice. A government grant may take a form of a transfer of a non-monetary asset such as land or other resources for the use of the entity. Assess the fair value of the non-monetary asset and account for both grant and asset at that fair value. I am getting land worth 1 crore of rupees free of cost. I will record land in my balance sheet at 1 crore. I will record the grant also at 1 crore. But then I will not leave the grant at 1 crore forever. I will take transfers from it to my P&L. Okay. Alternatively, what can you do? Record both asset and grant at a nominal amount. Nominal amount 1 rupee, or let's say in India 101 rupees. Right? In so many social functions, isn't it? We say 101 rupees you will be giving. So you can record the land also accordingly. At 1 rupee or 101 rupee, you may record the land. This is mainly to ensure that your fixed asset register is complete in every respect. It should not happen that you don't record land at all. Right? If you don't record the land at all, then a valuable asset is getting missed out from the balance sheet. That is the reason they are saying that no, at least you still have to record at a nominal amount, so that the readers of the financial statement know that okay, there is some land. You know, when I will prepare my annual report and when I'll when I'll share with you a schedule of fixed assets, at that time I will say land, and in additions column I will say 1 rupee. Okay, in additions column I will say 1 rupee. We know no one can buy land for 1 rupee. But the very mention of that 1 rupee in the fixed assets register confirms that there is some land that has been received by the entity. And then you can give a proper disclosure in notes that this 1 rupee land that we have recorded is basically land that we have received free of cost from the government. And what conditions you will have to fulfill for the same, those conditions can also be mentioned. Hence, the readers of the financial statements will be able to appreciate that land has been received free of cost by the company, and that is the benefit that is available to the entity. Similarly, what shall be the disclosure of the government grant in the statement of cash flows? Government grant that you are receiving, and out of that the acquisition of the assets, these are basically cash flows. One is a cash outflow, another is a cash inflow, and accordingly it should be reported in our statement of cash flows. Whatever asset that you are purchasing because of the government grant, this will be an outflow under investing activities. And whatever is the receipt of the government grant, that will be an inflow under the financing activities. And again, you have to follow this particular approach irrespective of whether you are treating the government grant as deferred income or you are treating the government grant as something that needs to be deducted from the cost of the asset. It doesn't matter. What is your treatment in the P&L and balance sheet does not matter. You have to take a pure cash flow angle over here. You are receiving government grant. That means you are receiving cash. It's an inflow. Consider it as an inflow from financing activities. And out of that, you are purchasing an asset. Purchase of asset, fixed asset, intangible asset, doesn't matter. Purchase of the asset will be an outflow under the investing activities. Suggest treatment of government grants based on Ind AS 20. In A, they are saying that government gives a grant of rupees 10 lakhs for past research and development of H1N1 vaccine to A Pharmaceuticals Limited. There is no condition attached to the grant. Examine how the government grant be realized. Your eyes should be on this. No condition attached to the grant. That means it is an unconditional grant. Unconditional grants are, yes, unconditional grants are immediately recognized as an income in profit or loss. When no conditions are attached, we should immediately recognize the grant as our income. The entire grant should be recognized immediately in profit or loss. In B, they are making a slight variation. They are saying government gives a grant of rupees 10 lakhs for research and development of H1N1 vaccine to A Pharmaceuticals Limited. Even though similar vaccines are available in the market but are expensive, the entity has to ensure by developing a manufacturing process over a period of 2 years that the costs come down by at least 40%. How will the government grant be realized this time? If you check here, it is not exactly an unconditional grant. Government is giving you 10 lakhs of rupees. Government wants you that you utilize this 10 lakhs rupees for research. Government is insisting that you develop a vaccine whose cost is at least 40% less. That means a condition is attached that you have to use this money for the purpose of research, and that too for bringing about a better, and if not better, at least a cost-effective vaccine. This kind of a government grant can be treated as deferred income. You cannot immediately credit it to the P&L. You will have to treat it as a deferred income over a period of 2 years. And on some systematic base, you will have to take credit to your profit and loss account. The entire grant should be recognized immediately as deferred income. Okay, they are not saying recognize immediately as income, as deferred income, and charged to P&L over a period of 2 years, right? A village of artisans in a district got devastated because of an earthquake. A Limited was operating in that district and was providing employment to the artisans. The government gave a grant of rupees 10 lakhs to A Limited so that 100 artisans are rehabilitated over a period of 3 years. Government releases rupees 2 lakhs. Examine how the government grant be realized. Okay. Again, there is a condition over here. One thing that is becoming clear is it is not an unconditional grant. There was a village of artisans. That village has been devastated because of earthquake. A Limited is operating there. Government is saying that, okay, we are giving you 10 lakhs of rupees. But with this 10 lakhs, you have to rehabilitate 100 artisans. And it has to be done over a period of 3 years. I believe the accounting is becoming very clear of the government grant. It should be treated as a deferred income. That's the first thing. And it should be recognized in the P&L over a period of 3 years by following some systematic base. Question is, how much of the grant will be treated as deferred income? Grant given is 10 lakhs, but the cash released is 2 lakhs. See, in our accounting, we will follow accrual principle, not cash principle. The grant which has been granted to us is 10 lakhs. Hence, entire accounting will be done for 10 lakhs. Whether cash of 2 lakhs is only received or 4 lakhs is received or not received, we are not going to get into it. You have to follow the accrual principle. Since the grant sanctioned is 10 lakhs, your entire accounting will be for 10 lakhs of rupees. Over a period of 3 years, following some systematic base, transfer 10 lakhs from deferred income to your profit or loss. A Limited will recognize rupees 10 lakhs as government grant and set it up as a deferred income and will recognize it in its P&L over a period of 3 years as per the principles enunciated in Ind AS 20. Right. Once a government grant is recognized, any related contingent liability or contingent asset is treated in accordance with Ind AS 37. The manner in which grant is received does not affect the accounting method to be adopted in regard to the grant. Thus, a grant is accounted for in the same manner whether it is received in cash or as a reduction of a liability to the government or in the form of a non-monetary asset. Some additional stuff is there in the response, but the main response is what we had already seen it earlier, right? That you have to recognize 10 lakhs as deferred income. You have to recognize it in your P&L over a period of 3 years following some systematic base. Only 2 lakhs is released right now. Hence, what should be the treatment of the remaining 8 lakhs? They are saying that remaining 8 lakhs will represent a probable inflow of resources. In other words, it is a contingent asset. One may argue, okay, it's a contingent asset. Fine. Contingent assets will be disclosed. Contingent assets will be reported in your notes as per Ind AS 37. And then they are saying whether the grant is received in cash or in kind, accounting all remains the same. Fine. The other description has nothing to do with the response. The response was already given earlier. The next one. A Limited wants to establish a manufacturing unit in a backward area and requires 5 acres of land. The government provides the land on a leasehold basis at a nominal value of 10,000 per acre. The fair value of the land is rupees 1 lakh per acre. Calculate the amount of the government grant to be recognized by the entity. The government, read it here. They say the government provides land. This is a non-monetary grant. Okay, it's a non-monetary grant. You are getting land. You are getting land. First approach is work out its fair value. Okay, fair value is 1 lakh acre per rupees 1 lakh per acre. 1 lakh, and you are getting 5 acres, right? That means the fair value of the land is 5 lakhs. I should recognize land in my books at its fair value of 5 lakhs of rupees. Similarly, the grant should be also valued at its fair value. Okay, land is not available free of cost. 10,000 rupees per acre is still required to be paid. Okay, that means what will be the amount of the grant then at fair value? We have to take 5 lakhs, and from this 10,000 into 5 acres, that is turning out to be 50,000. That means the grant is carrying a fair value of 4,50,000. Okay, grant will be recognized at 4,50,000. If you are recognizing grant at 4,50,000, that means you will treat the government grant as a deferred income. And then over a period of time, for how long have we received this? The period and all is not very clearly given, but you will have to then decide that what will be the period up to which the grant will be able to compensate you for the expenses that you are going to incur. Over that period, you should recognize this grant as an income on some systematic base. Getting it? Land will be recorded in our books at its fair value of 5 lakhs. Grant will be recorded in our books at its fair value of 4,50,000, and then take transfers to the P&L over a period of time. Another alternative treatment is that you can record them at nominal amount. Okay, at nominal amount. We know that 10,000 rupees is required to be paid for 5 acres. That is turning out to be 50,000. 50,000 can turn out to be the nominal amount. Record land at 50,000, record the government grant at 50,000. That is another option that you have. Any one option should be selected and we should carry out its accounting. A Limited will recognize the land at fair value of rupees 5 lakhs and rupees 4,50,000 as government grant. Right? I have just shown you the calculation. This government grant should be presented in the balance sheet by setting up the grant as a deferred income. They are just leaving the answer over there that it should be treated as a deferred income. But remember, from deferred income, you'll have to take transfers to the P&L. What should be the length of the period and what should be the systematic base? This has to be decided by the management. Alternative, the land may be recognized at a nominal value of rupees 50,000. As I said, record the land in your books at 50,000 rupees, and even the government grant also at 50,000 rupees. And that is how you can provide an alternative treatment. If you are an entity that believes that the assets should be shown in the books at their fair values, then the first approach will be a better approach for you. Or otherwise, there is nothing wrong in following even the alternative approach given in Ind AS 20. MNC Limited has received grant in the nature of exemption of custom duty on capital goods with certain conditions related to export of goods under Export Promotion Capital Goods Scheme, that is the EPCG scheme of the Government of India. Understand? You are getting exemption of custom duty. Now see, custom duty is required to be paid when you are importing something. Okay. So what they are saying is that if you are exporting, certain conditions, see, there are certain conditions related to export of goods. For example, I am importing raw material, manufacturing the goods in India, and then I am exporting those goods. Government scheme is that if you are exporting the goods, then certain exemption will be available on the custom duty that you have paid on your imports. Okay. Now they are saying whether the same is a government grant under Ind AS 20, government grants and disclosure of government assistance. That's the first question. Is this a government grant? We understand government grant as assistance that you are receiving from the government. Right? This exemption that you are getting from customs duty is definitely one form of assistance that you are getting from the government. Then they are saying in the definition of government grant that it should be relating to the operating activities. When I will import, I am paying customs duty. When I am exporting, I will get some exemption. Obviously, this is all with respect to my operating activities. And for something to become a government grant, there should be a transfer of resources, right? Now, the exemption that I am going to get in the payment of the custom duty means I will be able to conserve cash. Maybe the import duty payable is reducing, that means the liability is reducing, or first I am paying the import duty and later on I am getting a refund for the same. Whatever way, ultimately resources are available. There is a transfer of resources from the government to the entity. Government grants are assistance that you are receiving from the government in the nature of transfer of resources from the government and relating to the operating activities. It is tick marking all the points which are there in the definition of a government grant. If you are asking me that is this a government grant, that's the question. Whether the same is a government grant, my answer is yes. It is indeed a government grant. If yes, then how the same should be accounted? Okay, our answer is yes. That means this next question also I'll have to answer. Is it a grant relating to asset or is it a grant related to income? Okay. Is this a grant related to asset? Grants related to asset are grants that you are receiving for procurement of some capital asset. Now here, if you see the scheme, it has nothing to do with the asset. I am not getting any funds to procure an asset. I am also not getting any asset itself on a non-monetary basis from the government. No such thing is happening. So if you're asking me it is a grant related to asset, the answer will be no. Grant is relating to exemptions that will be available on some import duty. If this exemption policy is not there, then import duty is an expense. It is a cost. I'll have to debit it to my profit and loss account. In other words, I am getting a grant which is relating to something which has to do with my profit or loss. Hence, I will say that it is a grant related to income. Okay. If it is grant related to income, then how it is to be recognized? Over a period of time on some systematic basis, isn't it? Government grants are assistance by government in the form of transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. Every box is getting tick marked over here. Exemption from custom duty is an assistance from the government if the import duty is getting refunded or the import duty payable is reducing, whatever it is, whether you are getting it in cash or it is by way of reduction in the liability, that does not matter. Ultimately, there is a transfer of resources. Conditions are attached. Okay, export, this EPCG scheme definitely will have conditions which you need to fulfill, and it is definitely relating to the operating activities. It is indeed a government grant. That's what they say. They say, in accordance to the above, in the given case, exemption of custom duty under EPCG scheme is a government grant and should be accounted for as per the provisions of Ind AS 20. In the given case, based on the terms and conditions of the scheme, the grant received is to compensate the import cost of assets subject to an export obligation as prescribed in the EPCG scheme, and it does not relate to purchase, construction, or acquisition of a long-term asset. I'm not acquiring any asset. That's what we were saying. Hence, it is a grant related to income. Grants related to income are presented as part of profit or loss over a period of 6 years. From where are we getting the 6 years? MNC has received, okay. No information is really given for 6 years anyways. They are saying as a part of the answer over a period of 6 years, either separately or under a general heading such as other income. Alternatively, they are deducted in the reporting the related expense. Okay, they are saying grants related to income are presented as a part of profit or loss over a period. Just remove the 6 years. Okay, we will simply say over a period. What is the period? It is not very clear, but how long will you be able to take the benefit of this particular scheme? That is will give you a fair idea that how it should be recognized. And how will you present it in your P&L? You can present it separately, or as a part of other income, or as a deduction from the related expense. Any one way can be selected, and accordingly you can carry out the accounting for the same. Suggest treatment of government grants based on Ind AS 20. A Limited received 1 acre of land to set up a plant in backward area. The fair value of the land is 12 lakhs and acquired value by government is 8 lakhs. We are receiving 1 acre of land. In other words, you are receiving a non-monetary grant, right? If you are receiving any asset by way of a grant, or we can say a grant which is received in kind, then Ind AS 20 says that whatever non-monetary asset that you have received, you should disclose that in your books at its fair value. If I check over here, I am getting 1 acre of land and its fair value is 12 lakhs. What is the value at which the government acquired the land is not important. Ultimately, when I receive land from government, the value of that land is 12 lakhs. Hence, what I will do is, I will report land at its fair value of 12 lakhs, and correspondingly, I will also create a government grant of rupees 12 lakhs. Getting it? What I am trying to say is that the asset as well as the grant, both of them will be valued at its fair value. And then, of course, you should take transfers from the government grant. You have to treat government grant as a deferred income, and you have to take transfers to your profit and loss account. How long? Well, that is what you will have to really do the calculations over here, because here I cannot say that we will do it over the useful life in what we can say in ratio of depreciation. Since you are getting land has infinite useful life. Land we will never depreciate. Hence, a certain period of time has to be computed and some systematic base has to be decided by the management of the company. This we have to leave to the judgment of the management of the company. They will find out that this land, to what extent it will be able to compensate you for the expenses that you are going to incur over that period of time. On some systematic base, you can recognize the deferred income by taking credits to your profit and loss account. Alternate approaches, if you do not want to do all these things, then you can just record the asset at a nominal value. Let us say 1 rupee. Okay, or 101 rupee, right? Whatever you feel is the right nominal value, you can record the asset at that value. We check with the response. Land and government grant should be recognized by A Limited at fair value of rupees 12 lakhs, and the government grant should be presented in the books as deferred income. Okay. Alternatively, the company is following the policy of recognizing non-monetary grants at nominal value. Then the company will recognize the land at nominal value of, say, rupee 1. B Limited received an amount of loan for setting up a plant at a concessional rate of interest from the government. You are getting a loan at a concessional rate of interest. You have to treat this as per Ind AS 109 and as well as Ind AS 20. Okay, two Ind AS will be applicable over here. The fact of the matter is that you are receiving a loan. Loan has to be repaid. This will give rise to a contractual obligation of delivering cash. A contractual obligation of delivering cash is a financial liability, and hence it has to be treated as per Ind AS 109. Whatever is the cash outflows, those cash outflows should be discounted at the market rate of interest. That will give us the amount of the loan. Okay, that will become the fair value of the loan. And whatever is the cash received, from that you deduct the fair value of the loan. Whatever extra you are getting, right, that is the concession, or you can say that is the government grant. How that government grant should be treated will all depend upon for what purpose the grant has been given. This concessional loan, is it for acquisition of a depreciable asset? This concessional loan is for acquisition of a non-depreciable asset, right? One has to really now really find out that for what purpose the loan has been granted, and then further accounting can be carried out. Loan at a concessional rate of interest is to be measured at fair value and recognized as per Ind AS 109. Value of concession is the difference between the initial carrying value of the loan determined in accordance with Ind AS 109 and the proceeds received. The benefit is accounted for as a government grant. We are simply leaving it over there. We are simply saying that the benefit is the government grant. How that grant will be treated, no information is given. If they're given to us that this loan will be ultimately used for acquisition of a depreciable asset, then we can give further treatment of the government grant. Here we are simply suggesting that this is how the amount of government grant will be computed. D Limited received an amount of 25 lakhs for immediate startup of a business without any condition. It's an unconditional grant. You know it very well. What will you do with an unconditional grant? Immediately recognized in the profit and loss account, right? 25 lakhs I will directly, entirely, I will credit it to the P&L. Rupees 25 lakhs has been received by D Limited for immediate startup of business. Since this grant is given to provide immediate financial support to an entity, it should be recognized in the statement of profit and loss immediately as per Ind AS 20. And they say now that S Limited received rupees 10 lakhs for purchase of machinery costing rupees 80 lakhs. Useful life of the machinery is 10 years. Depreciation on this machinery is to be charged on straight line basis. 10 lakhs for purchase of machinery. You are going to acquire a depreciable asset. If you are acquiring a depreciable asset, there are two approaches under Ind AS 20. I hope you are able to recall those two approaches. The first approach, treat the government grant as deferred income. Over the useful life of the asset, in our case 10 years, we will take transfers from deferred income to the profit and loss account in the ratio of depreciation. They are saying depreciation will be charged on straight line basis. Hence the grant that you have received of 10 lakhs, I will divide that by 10 years. That is turning out to be rupees 1 lakh. Every year 1 lakh will be credited to the statement of profit and loss from the deferred income. And the machine will be recorded at the full value of 80 lakhs. Hence I will charge depreciation on rupees 80 lakhs. Alternative number 2, the government grant will be deducted from the cost of the asset. Machinery is costing 80 lakhs, I received 10 lakhs. I will record in my books machinery at 70 lakhs of rupees. And on 70 lakhs, I will provide for the depreciation. Rupees 10 lakhs should be recognized by S Limited as deferred income and will be transferred to profit and loss over the useful life of the asset. In the case, rupees 1 lakh should be credited to profit and loss each year over a period of 10 years. Alternatively, the government grant shall be deducted from the cost of the machinery. The machinery will be recognized at 70 lakhs. Reduced depreciation will be charged to the profit and loss account. Because I will be recording the asset at 70 lakhs of rupees, I will charge depreciation on 70 lakhs. In the earlier approach, when you treat it as a deferred income, the machine will be recorded to the full value of 80 lakhs. Then I'll be charging depreciation on rupees 80 lakhs. Suggest treatment of government grants based on Ind AS 20. Rupees 50 lakhs received for immediate startup of business without any condition. Without any condition, you have to immediately transfer it to the profit and loss account. They are saying you should recognize in the statement of profit and loss immediately, as there are no conditions attached to the grant. Rupees 70 lakhs received for research and development of drugs required for the treatment of cardiovascular diseases with following conditions. Drugs should be available to the public at 20% cheaper from the current market price, and the drug should be in accordance with the quality prescribed by the government drug control department. Conditions are attached, right? They are making it very clear. You are getting 70 lakhs with following conditions. That means I cannot credit entire 70 lakhs to my P&L. They have also not given any period of time over here. So how much time will it really take you to develop these drugs? That can become the period over which 70 lakhs will be credited to the profit and loss account. Of course, some systematic base has to be decided that on what basis we are going to credit it to the P&L. But today when you receive 70 lakhs of rupees, 70 lakhs should be set up as a deferred income. Take transfers over a period of time on some systematic base. Okay. Only thing is you should be certain that you will be fulfilling these conditions. 70 lakhs will be recognized in the P&L on a systematic basis over a period in which the entity is expecting that the grant will compensate you for your expenses. However, for this compliance, there should be reasonable assurance that the entity complies with the conditions attached to the grant. Three acres of land, fair value 20 lakhs received for setup of plant. Non-monetary grant, record land at its fair value of 20 lakhs and create a corresponding deferred income for the government grant of 20 lakhs and then take transfers. You will have to decide over what period. You will have to decide the systematic base. Alternatively, record the land at a nominal value, right? Land will be recorded at fair value of 20 lakhs. Government grant should be present in the balance sheet by setting up a grant as the deferred income, or you can present the land in the books at a nominal value. Rupees 4 lakhs received for purchase of machinery of 10 lakhs. Useful life of machinery is 4 years. Depreciation on this machinery is to be charged on straight line basis. You are acquiring a depreciable asset. Two approaches are prescribed by Ind AS 20. Isn't it? The first one is that you will record the machinery at its cost of 10 lakhs and 4 lakhs will be set up as a deferred income. Useful life is 4 years. So over a period of 4 years, we will take transfers to the P&L. Since it is straight line basis, I can say it will be 4 lakhs divided by 4. Every year 1 lakh will be credited to the P&L from deferred income. Second alternative is that the cost of the machine is 10 lakhs. I am getting grant of 4 lakhs. I deduct that. I record the machinery in my books at 6 lakhs. And then on 6 lakhs, I will charge for the depreciation. As you can observe in the response, 4 lakhs will be considered as deferred income, transferred to the P&L over the useful life of the asset. 1 lakh will be credited to the P&L over a period of 4 years. Alternatively, the government grant shall be deducted from cost of the machinery. Machinery will be recognized at 6 lakhs of rupees and on 6 lakhs you will provide for the depreciation. An entity opens a new factory and receives a government grant of rupees 15,000 in respect of capital equipment costing rupees 1 lakh. It depreciates all the plant and machinery at 20% per annum on straight line basis. Show the statement of profit and loss and balance sheet extracts in respect of the grant for the first year under both the methods of Ind AS 20. You are acquiring a capital equipment and that capital equipment will be depreciated. That means you are getting a grant for a depreciable asset. For a grant for a depreciable asset, there are two approaches given in Ind AS 20. The first approach is that whatever government grant that you have received, you treat it as a deferred income, and then you will take transfers from it to your profit and loss account. This will happen in the ratio of depreciation. If it is a depreciable asset, you have to do it in the ratio of depreciation over the useful life of the asset. Okay, we are receiving a government grant of rupees 15,000 and they are saying that 20% depreciation will be charged and on straight line basis. Now if you say 20%, every year you will write off 20%. That means in 5 years you will write off 100%. Indirectly I come to the conclusion that the period over which the government grant is required to be recognized will be the useful life of the asset, and the useful life of the asset will turn out to be 5 years. Every year if you are writing off 20% through SLM, in 5 years 20 into 5, 100%. In 5 years 100% of the asset will be written off, and that's the reason I am suggesting that whatever treatment is to be given, that treatment is to be given over a period of 5 years. Okay, what will you do? You will first consider deferred income, right? 15,000 will be the deferred income. When first year ends, 15,000 into 20%, that is turning out to be 3,000. This 3,000 will be credited to profit and loss account. Okay, I will credit this to the P&L. Comfortable? Okay. Then what will happen? 12,000 rupees of balance will be left. See, deferred income was 15,000. Out of that, 3,000 at the end of the first year will be credited to the P&L. Hence, you will be left with a balance of 12,000. How to show this 12,000 in the balance sheet? Because they are saying that you prepare a balance sheet extract. How shall I show this 12,000 in the balance sheet? Okay. This has to be split into current and non-current. See, this deferred income that you are showing, it is actually a liability. It has to be shown as a liability in your balance sheet. In liabilities, we know we have heads of non-current liabilities and current liabilities. Okay. This 12,000 which I will report in the balance sheet should be now split into its current and non-current components. Anything that will reverse within the next 12 months will be considered to be current. Now we know that every year 3,000 will be credited to the P&L. Hence, out of 12,000, 3,000 will be treated as a current liability, and the balance figure of 9,000 will be treated as non-current liability. Hope you are comfortable till here, right? First treat it as a deferred income, then take transfers to the P&L. 20% will be transferred every year. 15,000's 20% is turning out to be 3,000. So 3,000 will be credited to the P&L. I am left with a balance of 12,000 at the end of the first year. How will I report 12,000 in my balance sheet? Whatever will reverse in the next 12 months, I will show under the head of current liability, and the balancing figure, I will show it under the head of non-current liability. This is for the government grant. As against that, you are also having a capital equipment, right? That will turn out to be an item of PPE, isn't it? This is a capital equipment. It turns out to be an item of PPE, which I will record at its full cost of 1 lakh, right? I will record at full cost of 1 lakh. At the end of the first year, I will provide depreciation. Depreciation will be 1 lakh into 20%. That will turn out to be 20,000. This 20,000 will be debited to profit and loss account. When you will prepare the extract of the P&L, you will show depreciation 20,000 and you will show government grant, which is recognized as an income to the extent of 3,000. In the balance sheet, you will report as a non-current asset PPE 1 lakh minus 20,000, that will turn out to be 80,000. Okay. And for the liabilities, current liability and non-current liability, which we have already discussed. Right. Yes, when grant is treated as deferred income, all the points have been discussed by us. The entire grant should be recognized immediately as deferred income and charged to P&L over a period of 5 years. Why 5 years? You are writing off 20% every year. In 5 years, 100% will be written off. That's the reason 5 years. At the end of the first year, government grant to be credited to the statement of profit and loss will be 3,000 and depreciation will be 20,000, right? Everything I have discussed with you. Further, in balance sheet, report government grant to be recognized in profit and loss within 12 months of reporting date to be current. Balance shall be non-current. That breakup of 3,000 and 9,000 that we had discussed. And here it is. Yes, the statement of profit and loss. You will be debiting the P&L by depreciation of 20,000, credit the government grant by 3,000, 1 lakh minus 20, show the PP at 80,000, and 3,000 is current liability, so 9,000 is non-current liability, and this 3,000 is the current liability. Right, under non-current liability, you are showing government grant. Here also you are showing government grant. You can even use the word deferred income also. Instead of government grant, you can even say deferred income. That is also absolutely fine. Okay. What is the second method? In the second method, whatever is the government grant, that government grant will be deducted from the cost of the asset. Okay, I'll deduct it from the cost of the asset. This time government grant will not be reported in your books. I will say PP 1 lakh. From that I'll deduct 15,000. I will report the PP in my balance sheet at 85,000. Okay, and on 85,000 at the rate of 20%, I will provide for the depreciation. This depreciation will be debited to the P&L. So if I take 85 and multiply that by 20%, that is turning out to be rupees 17,000. Hence, this time when you prepare the P&L, you will show depreciation 17,000. There is no question of taking any credit from the government grant because I did not recognize the government grant at all. I simply deducted it from the cost of the PP. And yes, in the balance sheet as a non-current asset, I'll show PP 1 lakh less depreciation 15. I will show it at 85,000. So when grant is deducted from the cost of the asset, machinery will be recognized net of the government grant. I'll show it at 85,000, 17,000. In the P&L, debit depreciation 17, non-current asset PP less accumulated depreciation 85 minus 17. You will be showing your PP in the outer column at rupees 68,000. Right, that's why I was saying that we will show at 85, depreciation 20, deduct this 17, yes, and we are getting 68,000. Show it in your balance sheet. Yeah, let's see one more question based on Ind AS 20. They are saying a company receives a cash grant of rupees 30,000 on 31st March 2021. Grant is towards the cost of training young apprentices. Training program is expected to last for 18 months starting from 1st April 2021. Actual cost of the training incurred in 2021-22 is 50,000 and 22-23 is 25,000. State how this grant should be accounted for. Okay, we are given a grant this time for meeting training costs. That means this is not a grant for acquiring a depreciable or a non-depreciable asset. This is a grant which is relating to income, right? This training cost will be debited to the P&L. And for meeting those expenses, you are getting a government grant, right? So we will be considering this as a grant relating to income. Grant relating to income can be presented in the P&L by following any one of the two approaches. One approach is that the government grant will be credited to the P&L as a separate item. And the second approach is that the government grant will be deducted from the expense that the grant intends to compensate. So there are two approaches by which I can show it in my P&L. In balance sheet also, whatever is the unamortized portion of the deferred income, that has to be shown as a liability, and it needs to be split into its current and non-current components. If you just go through the dates over here, see, on 31st March 2021, you are receiving a grant of 30,000. That means I'll have to treat this as a deferred income. Okay, I'll have to treat a deferred income of 30,000 rupees. Training will start in the next year. Before the year starts, you have already received this particular grant. 30,000 rupees will be treated as deferred income, and it needs to be reported in my balance sheet, and I have to split this 30,000 into its current and non-current components. How will I do that? It's really very simple. The total length of the training period is 18 months. Remember, whatever is going to be recognized within the next 12 months in the P&L will be treated as a current liability. Anything over and above that will be non-current liability. Okay. So what I will do is I'll take 30,000 and multiply that by 12 by 18. Okay. 30,000 into 12 by 18. That is turning out to be 20,000. You are getting a grant of 30,000. Out of 30,000, 20,000 will be transferred to the P&L in the next 12 months. Hence, this 20,000 is a current liability. And then we take the balancing figure. The balancing figure is 10,000. This is your non-current liability. When you prepare your balance sheet on 31st March 2021, please report 20,000 as current liability and 10,000 as non-current liability. When you prepare the extract of the balance sheet, okay, under non-current liability heading, you will show 10,000, and under the current liability heading, you will show 20,000. When? 31st March 2021. Okay. Now what will happen? The next year is 2021-22. In 2021-22, this 20,000 which is there, right? This 20,000 will be credited to profit and loss account. Or it will be deducted from the training cost. Any one approach can be followed for the presentation. 20,000 will be credited to the P&L or deducted from cost. In 2021-22, they are saying cost is 50,000. So my two approaches will be something in this way. I will credit my P&L by 20,000. I will debit my P&L by training cost of 50,000. Or 50 minus 20, I debit my P&L only by the net expense of 30,000. Both the ways of presentation are allowed by Ind AS 20. Okay, what more will happen? Understand that. What more will happen? You will also have to prepare balance sheet on 31st March 22. 31st March 2022, you will prepare your balance sheet. Okay. This 20,000 is already credited to the P&L. So now I don't have to worry about the 20,000, but I still have this 10,000. This 10,000 has to be shown in the balance sheet. But this 10,000 will now reverse in the next 12 months. I hope you are getting my point, right? Since this 10,000 will be reversing in the next 12 months, now it will not be shown as a current liability. Instead, it will be shown as it will no longer be shown as a non-current liability. Now it will be shown as a current liability. And in the next year again, right? We are taking the next year. The next year is 22-23. In that year, this 10,000 will be credited to profit and loss or deducted from training costs, right? Any one approach can be followed. I hope you are comfortable. We will have to show extract of the balance sheet for 3 dates: 31st March 2021, 2022, and 2023. In 2021, 30,000 will be split into 20 and 10. Current liability 20, non-current liability 10. In the next balance sheet on 31st March 2022, that 10,000 which in the earlier year we were showing as non-current liability will be now reclassified to current liability. And on 31st March 2023 balance sheet, nothing is to be shown because this another 10,000 is also now credited to the P&L. Entire deferred income has already got recognized in the P&L. Insofar as the P&L is considered, show the government grant separately and the training cost separately. That is method 1 or approach 1. And in the second approach or second method, you will debit only the net expense. 50,000 is incurred in 2021-22 and 20,000 will be credited to the P&L. So 50 minus 20 show only 30,000. And in the next year, 25,000 minus 10,000 show 15,000. I have discussed the entire solution with you. On 31st March 2021, the grant will be recognized as a liability and present in the balance sheet as split between current and non-current. 20,000 rupees, we have already discussed that, is current and would be recognized in the P&L for the year ended 31st March 2022, right? The next year. The balance amount of 10,000 will be shown as non-current. Okay. You can see in the extract of the balance sheet, 31st March 2021, as we had discussed, 20,000 is current liability and 10,000 is the non-current liability. Then this 10,000 will reverse in the next year. That's the reason 10,000 will now become a current liability. You can see we are now showing it under the head of current liability. And by the time you reach 31st March 2023, entire 30,000 has got recognized in the P&L. No balance of deferred income is left. So I am not showing anything in the balance sheet on 31st March 2023. If you check with the extract of the P&L, yes, extract of the P&L, method 1 or approach 1, credit 20,000 separately, debit 50,000 separately, credit 10,000 separately, debit 25,000 separately, or debit the net expense, right? Rainbow Limited is carrying out various projects for which the company has either received government financial assistance or is in the process of receiving the same. The company has received 2 grants of rupees 1 lakh each relating to the following ongoing research and development projects. The first grant relates to Clean River project, which involves research into the effect of various chemical waste from the industrial area in Madhya Pradesh. However, no major steps have been completed by Rainbow Limited to commence this research as at 31st March 2022. What really matters is that you have already received the government grant. Whether you have started working on the project, whether you have started giving effect of the research that you are supposed to carry out, doesn't matter. The fact of the matter is that you have already received the government grant, and because you have already received the government grant, it has to be accordingly recognized in our books. Now, when I read this first, right, again, if you read, they are saying first grant is for Clean River project. You have to carry out certain research. There isn't any conditions attached. Now, if you see it carefully, we are not coming across any conditions that this research has to get completed within 1 year or within 2 years and so and so. No such condition is there. If this is really an unconditional grant, then we should be crediting it to P&L immediately. Entire 1 lakh should be credited to the P&L if it is an unconditional grant. However, let us say it's quite possible that conditions are there, but somehow they have not given us the conditions over here. They have just given us abridged information. If conditions are attached, then entire 1 lakh cannot be credited to the P&L. Now, Rainbow Limited should make a projection that how much time will this research take. If you are of the view that the research will take, let us say 3 years, I'm just assuming, let us say it will take 3 years, then 1 lakh rupees should be recognized as an income over a period of 3 years by developing some systematic base. That is what I can do with the first grant. They are saying the first grant for Clear River project involving research into effects of various chemical waste from the industrial area in Madhya Pradesh seems to be unconditional. See, very limited information is there. That's the reason we are saying it seems to be unconditional, as no details regarding its refund has been mentioned. Even though research has not yet started nor any major steps have been completed by Rainbow Limited to commence the research, yet the grant will be recognized immediately in profit and loss for the year ended 31st March 2022. I have to credit 1 lakh to the P&L if it is an unconditional grant. There is no reason for me to carry out certain steps and research only then I can recognize it as income. No, you have already received the grant, and because it is unconditional, even if I do not do any research, I still don't have to refund it. I hope you get my point, right? And that is the reason 1 lakh should be credited to the P&L. But there can be conditions, okay? In case the grant is conditional as to the expenditure on research, the grant will be recognized in the books of Rainbow Limited over the period the expenditure has been incurred. That's what I said. Will it take 3 years for you to complete your research? That means for 3 years you will incur research expenses. That is what the grant of 1 lakh intends to compensate you from. So please recognize it over a period of 3 years on some systematic base. Okay. What about the second grant? Okay, let's see that. The second grant relates to commercial development of a new equipment that can be used to manufacture eco-friendly substitutes for existing plastic products. Rainbow Limited is confident about the technical feasibility and financial viability of this new technology, which will be available for sale in the market by April 2023. Okay. This second grant is definitely conditional. This second grant is for commercial development of a new equipment, and this new equipment will develop eco-friendly substitutes for plastic products. We know that one of the major pollutants in India is the release of plastic products, especially in rivers, even in oceans, right? It's a very big hazard actually. And this is what we intend to do. We have to really find a substitute to plastic, and that is the reason. We are trying to develop some new technology by the which we will commercially develop a new equipment, and then you will be able to sell this equipment in the market, and then people who are buying this equipment can produce products which will work as substitutes to plastic products. If you do not develop this kind of a technology, then obviously the grant will become refundable. So this is a conditional grant. If it is a conditional grant, it should be treated first as a deferred income, and then it should be recognized in the P&L over a period of time following some systematic base, following some rational base. Okay, that is what I'll be doing over here. Another thing that we have to understand is that we are going to develop this new equipment. That means this is capital WIP, right? Construction will continue. We know that when it is for an asset, we also have an alternate approach. The grant can also be deducted from the cost of the asset, but the asset will be ready only by April 2023. Till that time, I don't have an asset. That is the reason what you will have to do is, initially you will have to treat the grant as a deferred income. You can take transfers to the P&L also. That is your first method. But what if I want to follow the second method, where we deduct the government grant from depreciable assets? Okay. If you are deducting the government grant from the cost of the asset, first the asset should be ready. Even if you are following the second approach, first you will have to hold 1 lakh rupees of government grant as deferred income. Today is 31st March 2022. I will treat it as a deferred income. April 2023, the asset will become ready. Then from the cost of that asset, you can deduct 1 lakh. This is how the treatment can be given for this second grant. The second grant relates to a commercial development of a new equipment, is a grant related to depreciable asset. As per the information given in the question, the equipment will be available for sale in the market from April 2023. Hence, by that time, grant relates to the construction of an asset and should be initially recognized as deferred income. Right? Asset will be available, but that will be available in April 2023. So first show it as deferred income. If you follow the deferred income approach, you can even recognize that income on a systematic and rational basis over the asset's useful life. Or alternatively, you wait till April 2023, and on 1st April 2023, Once the cost of the equipment has been determined, once the capital WIP is transferred to a completed fixed asset, at that time 1 lakh can be deducted from the cost of the asset. In September 2021, due to the floods near one of its factories, the entire production was lost, and Rainbow Limited had to shut down the factory for a period of 3 months. September 2021, there was a flood in near one of our factories, and our production has been lost, and we had to shut down the factory for continuous 3 months. The factory remained shut down. The state government announced a compensation package for all the manufacturing entities affected due to the floods. As per the scheme, Rainbow Limited is entitled to a compensation based on the average of previous 3 months sales figure prior to the floods, for which the company is required to submit an application form on or before 30th June 2022 with necessary figures. The financial statements of Rainbow Limited are to be adopted on 31st May 2022, by which date the claim form would not have been filed with the state government. Okay. See, our year or our date with reference to which we are solving the question is 31st March 2022. Okay. Flood occurred in September 2021. That means flood has occurred during the year 21-22. That is fine. But application form and all, if you will see, they are saying that an application form on or before 30th June 2022, and we are able to adopt our financial statements only on 31st May 2022. The state government is saying that you estimate what is the loss suffered by you, and we will provide a compensation for the same. The compensation package is based on average of previous 3 months sales figure prior to the floods. Prior to the floods, whatever 3 months were there, find out what were the sales. Its average will be compensated by the government. Why? Because your factory remained shut for 3 months. Hence, this is the compensation package. But for that, you have to really submit the necessary form. And along with the form, you will also have to send a copy of your financial reports. Now, all these things will happen only by 31st May 2022. Getting it? Application form will be filed. Application form will be filed by us, but after the year has come to an end. Okay. Can I treat this as an adjusting event? Can I treat this as adjusting event? And hence I may be of the view that yes, this government grant or the government compensation which I am going to receive, it can be considered as an income. Now see, you have to first file the application form, and only after filing the application form, the government will scrutinize your application. The government will go through your financial statements, and then the government will decide how much compensation is to be paid. I cannot recognize government grant in my books till the receipt of government grant is certain. If you are of the view that I will file the application form and immediately the government will release the funds, that's not how governments work, right? So what will happen over here is it will take a lot of time before that money is going to be received. This government grant ultimately will be received in 22-23 only. Okay. In the year 22-23 only you are going to get this government grant. I cannot recognize government grant till the receipt of the government grant is ensured. That is the reason. We will not give any treatment for this flood related compensation in the current year. In the next year, as and when you are getting assurance from the government that so and so funds will be released, at that time you can carry out the accounting of the government grant. Accounting of government grant will not occur in the current year. It has to be postponed to the next year. And in next year also I will do accounting only once it is confirmed, once I have the assurance that the government grant shall be received. Rainbow Limited will be able to submit an application form only after 31st May 2022, that is in the year 2022-23. Although the flood happened in September 2021 and the loss was incurred due to flood related to the year 2021-22, The entity should recognize the income from the government grant in the year when the application form related to it submitted and approved by the government for compensation. Getting it? I cannot recognize it in current year. It will become a contingent asset because I may receive that money, I may not receive that money, isn't it? That is the reason we cannot show it in our books. Since in the year 2021-22, the application form could not be submitted due to adoption of financials with respect to sales figure before the flood occurred, Rainbow Limited should not recognize the grant income as it has not become receivable as on 31st March 2022. When you are preparing your balance sheet or you are finalizing your financial statements for the year ended 31st March 2022, at best what you can do is you can consider this as a probable inflow of resources and you may show it as a contingent asset. You may do it so. However, the better treatment is not to highlight anything with respect to it. We should wait till we get the assurance from the government that so and so funds will be released. After that, it can be recognized as an income. But all that will happen in the next year and not in the current year. A Limited received from government a loan of ₹1 crore at the rate 5% payable after 5 years in a bulleted payment. Bulleted payment means we will repay the loan in a single installment. You know, normally when we are arranging loans from a bank or a financial institutions, they will fix what is popularly known as EMI, equated monthly installment. Every month you are paying an equal amount. But the word used over there is installment. Installment means interest plus principal. That means every time you are paying an EMI, a certain portion of principal is also getting repaid. But when you say that loan is at a bulleted payment, that means I will only pay interest, and at the end of the tenure of the loan, I will repay the principal amount. Now, government has given us a loan of 1 crore rupees at 5%. The prevailing market rate of interest is 12%. Interest is payable regularly at the end of each year. Calculate the amount of government grant and pass necessary journal entry. Also examine how the government grant be realized. Also state how the grant will be recognized in the statement of profit or loss, assuming that the loan is to finance a depreciable asset. Okay. You are getting a concessional loan. The market rate of interest is 12%, but government will charge from you only 5%. This benefit which has been passed on to you, that is what will be the grant. You are receiving 1 crore. 1 crore is not the amount of grant. That is the first thing that should settle down to you. The money which is to be refunded back to the government, how can I say it is a grant, right? 1 crore you are receiving, but 1 crore you are not receiving free of cost. It is not a forgivable loan that you no need to pay the interest also and no need to even repay the principal. That's not the kind of the loan which they have given to us. They have given us a loan at a rate which is lower than the market rate of interest. Hence, what I will have to do here is I will have to apply the requirements of Ind AS 109 first, and then it will become a question of Ind AS 20. Ind AS 109 is dealing with financial instruments. Because you are supposed to repay the loan, it is giving rise to a contractual obligation of delivering cash. Contractual obligation of delivering cash is nothing but a financial liability. And this financial liability has to be recognized as per the requirements of Ind AS 109. This is not at market terms, right? This contract is not at market terms. And hence we will have to calculate the fair value of the financial liability. Tell me, what will be the fair value? Whatever outflows are there, we will discount it at the market rate of interest and find out the present value. That will become the value of the loan. Anything extra that you are getting, that will be government grant. Okay. Year wise, I will find out what are the cash outflows. Understand? The loan is for 5 years. Okay. For 5 years, I will pay interest. My loan is for 1 crore and the government has given me at 5%. Hence, my cash outflow will be 5 lakhs. And in the 5th year, this 1 crore is required to be returned back. So these are my cash outflows. These cash outflows should be discounted at the prevailing market rate of interest, and I should work out the present value. Whatever answer you are getting as the present value, that is the amount of the loan. Getting it? The total money received by us is 1 crore. From 1 crore, deduct the amount of the loan. Whatever extra you are getting, that is the benefit which is getting passed on to us, because we are getting this loan at a concessional rate of interest. That difference will be treated as a government grant. Okay. First question is calculate the amount of government grant. This is how I'll get the amount of the government grant. Then they are saying pass the necessary journal entry. Journal entry will be very simple. I am receiving 1 crore from the government. Hence, bank account debit 1 crore to, here you will get the loan amount, to loan account, to government grant account. Whatever was that difference, that will be a government grant. Then they are saying, how will the government grant be realized? See, once you are getting a government grant, we understand over here that this government grant, it can be relating to acquisition of an asset. You can treat it as a deferred income, and then you can take transfers to the P&L in the ratio of depreciation. Or alternatively, you may even deduct it from the cost of the asset if you wish. So that will be the way in which the government grant will be accounted for. But because they are saying how will the government grant be realized, they are referring to deferred income approach. You know, in the approach where you will deduct it from the cost of the asset, there is no question of realization of the government grant. You are simply deducting it from the cost of the asset. If they are using the word that how the government grant be realized, that means indirectly they are saying that we will follow the deferred income approach. And that is what we will be doing over here, right? Additionally, if you wish, you can even provide accounting for the loan also. But the accounting of the loan will not happen as per Ind AS 20. It will happen as per Ind AS 109. Loan at a concessional rate of interest is to be measured at fair value and recognized as per Ind AS 109. Okay. Value of concession is the difference between the initial carrying value of the loan determined in accordance with Ind AS 109 and the proceeds received. The benefit will be accounted for as a government grant. As we had discussed earlier, 5 lakhs is your interest and 1 crore is the principal repayment. We are discounting it at the market rate of interest and we are getting this amount. This is nothing but fair value of loan. Okay. Total money received by you is 1 crore. From 1 crore, deduct the amount of the loan, 74,76,690. Difference is 25,23,310. This is, right, this is your government grant, right? They are saying A Limited will recognize 25,23,310 as the government grant and will make the following accounting entry. We have already discussed the accounting entry, isn't it? Bank account debit, you are receiving 1 crore. So bank account debit by 1 crore. Deferred income, right? That's the government grant, to loan account. The 1 crore is split into the loan component and the deferred income component. This 25,23,310, which is your government grant, it will be recognized in profit or loss on a systematic basis over the periods in which A Limited recognize the related cost which the grant intends to compensate. If the loan is to finance a depreciable asset, then this 25, it should not be 34, it should be 310 over here. Okay. Will be recognized in profit or loss on the same basis as depreciation. They have expressly given in the question that this loan is for acquisition of a depreciable asset. What is the useful life of the asset and what will be the depreciation? Over the useful life of the asset in the ratio of depreciation, we will recognize the government grant in the P&L. Yes, as per Ind AS 109, the financial liability will be classified as amortized cost. So you can prepare an amortized cost schedule. This is nothing but amortized cost schedule. You will start with the amount of the loan and we will calculate interest at 12%, right? And the installment paid will be deducted by us. So that is how we are getting these figures. To the opening balance, you will add the interest and you will deduct the installment. That's how you'll get the closing balance. And that is what you will keep on repeating for the entire period, right? And be careful in the last one. It's not there in our answer, but you can write it down. You can put an asterisk on the last figure. It's a balancing figure. Okay, the last one is a balancing figure where we will have to make the loan equivalent to what you will repay as your last installment so that your closing balance becomes nil. Right, this is out and out Ind AS 109 treatment that we have provided. Till now we were discussing that how should we carry out the accounting of government grants. Remember one thing, majority of the government grants are conditional grants. There is some government scheme. Pursuant to that government scheme, grants will be disbursed to the entity. The entity will have to give a reasonable assurance to the government that so and so conditions which are attached to the government grant, those conditions shall be fulfilled by the entity. It is quite possible that today you are promising the government that we will fulfill the conditions. Based on that, the government is disbursing you the grant. However, at a subsequent stage, the government discovers that the conditions which were required to be fulfilled, you are no longer fulfilling it. Remember, in such a situation, the government can ask you to return back the grant. For example, there is a government scheme, let's say a state government scheme, that if you're establishing an industrial unit in a backward area, in a backward district, let's say, then so and so amount of government grant will be disbursed. You are promising the government that yes, I will set up my industrial unit in a backward district. Based on that, you are getting the grant. In the initial years, you are operating from the backward district, but over a period of time, you are gradually shutting down your operations there. You are concentrating more on the industrial unit that you have. Let's say you have another industrial unit, but in the urban areas. Government discovers this particular fact. At that point of time, the grant can become refundable. The government can ask you to return back the money, and that is what we are referring as the repayment of the government grant. If you are no longer fulfilling the conditions and as an entity you are now required to refund the grant back to the government, how shall the accounting be carried out? That is what we want to discuss now. Now, the way the accounting of the repayment of government grant will be carried out, it will be basically first trying to understand that originally how the government grant was accounted for. That will give you a fair idea about how the repayment of government grant is to be accounted. First and foremost, refund of government grant is not a prior period error. Let's make certain things very clear right now. In the past, you said to the government, you promised to the government that you will fulfill certain conditions. Now you are no longer fulfilling those conditions. That does not mean that you have committed any error in the past. In the past, you were fulfilling the conditions and accordingly the government grant was getting accounted for. Hence, in the current year, when you refund the government grant, do not treat it as a prior period error. Instead, it will be treated as a change in accounting estimate. Ind AS 8 says that consider the refund of the government grant or the repayment of the government grant as a change in accounting estimate. And if it is a change in accounting estimate, it means that the fact has to be given prospectively. Retrospective effect is not required. You have to just give a prospective effect for the same. What will be the accounting when the grant is to be refunded? Okay. Ask yourself, what was your original accounting? For example, the government grant is relating to a depreciable asset, or let us say for any particular asset. And earlier you had decided that you will follow what we refer as a capital approach. By capital approach, we mean the government grant will be deducted from the cost of the asset. If this is what you had done in the past, whenever you are refunding the government, you should, whenever you are refunding the government grant, whenever you are referring the government grant, you should add back the grant refunded and build up the carrying amount of the asset. You get my point? Let us say there is an item of PPE, the cost of which is 1 lakh rupees. And for this, you are getting a government grant, let's say of 20,000 rupees. We have decided that we will follow the option given in Ind AS 20, where the grant is deducted from the cost of the asset. What I will do is, from 1 lakh rupees, I will deduct 20,000 and I will record the PP in my books at 80,000. Okay. Let us assume for simplicity that useful life is 10 years. Let us again assume residual value is nil, and we have decided to follow straight line method of depreciation. What does that mean? It means 80,000 divided by 10. That means my depreciation per annum will be 8,000. Let us say 2 years have already gone by. In other words, I have provided depreciation. Okay. I have provided depreciation of 16,000, right? From 80,000, I am deducting 16,000. I am getting 64,000. This is the book value, or we can say this is the carrying amount right now. At the end of the second year, the government discovers that we are no longer fulfilling the conditions, and hence the government is asking us to refund the government grant. So I will carry out a repayment of the government grant. Okay. What did you do originally with the government grant? When government grant was received, you deducted it from the cost of the asset. Now when you will refund the government grant, it will be added back to the asset. Hence I will add it back. 20,000 is to be refunded. I will add back 20,000. My revised carrying amount will become 84,000. Getting it? Your revised carrying amount is 84,000 now. Comfortable till here? Originally, remember in this way, originally what did you do with the government grant? You deducted from the cost of the asset. So what will you do at the time of repayment of the government grant? You will add it back to the carrying amount of the asset. So I get the carrying amount as 84,000. But one extra thing needs to be done. If you had never received this government grant, then what would have been the amount of depreciation? That needs to be calculated. And what is the shortfall of the depreciation? That depreciation should also be deducted. Okay. Let's understand this point also. Originally, the cost of the PP was 1 lakh. Think for a moment that grant was never received by us. If we had never received the grant, we would have recorded the PP at 1 lakh. Useful life is 10 years. Residual value is nil. SLM, that means 1 lakh divided by 10. That means you would have charged depreciation of 10,000 rupees, isn't it? You would have charged depreciation of 10,000 rupees per annum. Please compare the figures. You would have charged 10,000, but because the grant was deducted, you charged only 8,000 per annum. In other words, you charged 2,000 rupees of depreciation less for the 2 years that have already gone by. This depreciation should be deducted. So once you get 84,000, from this I will deduct what I will refer as additional depreciation. Additional depreciation will be 2,000 into 2 years. How am I getting 2,000? After deducting the government grant, I was charging 8,000 rupees per annum. If I had never deducted the government grant, I would have charged 10,000 rupees per annum. That means I have charged 2,000 less. 2,000 into 2 years, that is turning out to be 4,000. Final carrying amount of my asset will be 80,000 in the books. If you had received a government grant originally for the acquisition of a depreciable asset, whenever you are refunding it, you should add it back. But please ensure that whatever is the shortfall in depreciation, you should deduct it. As if the government grant was not received, so we are getting that as 80,000. One more thing. This 80,000 carrying amount, it should be tested for impairment. Okay. It should not happen that there is some impairment provision that needs to be recognized. This PP, you invested in PP in an industrial unit in a backward district. Okay. There are certain conditions that, let's say for the next 10 years, you have to do business in this particular backward district. You have now shut down that particular plant. And that is the reason you are forced to refund this money. There is a possibility of impairment. Apply Ind AS 36, impairment of assets, and work out, is there any impairment loss? If there is an impairment loss, follow the requirements of Ind AS 36. Ind AS 20 simply says test for impairment. Okay. It will not cover how the impairment is to be calculated. Impairment will be calculated as per the requirements of Ind AS 36. This is what you will be doing if you had originally deducted the government grant from the cost of the asset. This is what we are discussing right now, right? Repayment of government grant. Okay, when conditions are not fulfilled by us, it will be a change in accounting estimate. Give the effect prospectively. Okay. We go to the main accounting issue. Repayment of grant is relating to an asset. And this is what we had done, right? Earlier grant was deducted from the cost of the asset. Increase the carrying amount of the asset by the amount of the grant refunded. Just add it back. And then, as I said, additional depreciation needs to be provided. Okay. Cumulative additional depreciation that would have been recognized in profit or loss to date in the absence of the grant shall be recognized immediately in profit or loss. And then we should test for impairment as per Ind AS 36. That was the illustration that we had taken up. If you have understood the illustration, then this is just a description of the scene. But when I received the government grant for an asset, I followed the deferred income approach. Okay. What to do then? I am buying an PPE worth 1 lakh and I am getting a grant of 20,000. We continue with those same figures. Cost of the PPE is 1 lakh. And the grant that I am receiving is 20,000. But this 20,000 I have treated as a deferred income. Okay, I have treated this as deferred income. That means depreciation and all will be charged on the original cost of 1 lakh itself. But this government grant will be credited to the P&L over the useful economic life of the asset in the ratio of depreciation. Useful life, we continue with 10 years. Residual value nil, and straight line method of depreciation. Hence, what will happen? Your deferred income will be 20,000. 20,000 divided by 10. That means every year 2,000 rupees will be credited to the P&L. So I say less credited to profit and loss account. Let us say 2 years. Okay, this 2 is for 2 years. That is turning out to be 4,000. We have 16,000 rupees balance. This is your unamortized balance. Okay, my unamortized balance is 16,000. And now the government is saying that you will have to repay the entire government grant of 20,000. This time this 20,000 cannot be added to the cost of the asset. I can add it to the cost of the asset only if it was deducted from the cost of the asset in the first place. This time I have not deducted the government grant from the cost of the asset. Rather, I have treated the government grant as a deferred income. Okay, now when you are repaying the government grant, you should first adjust, you should first apply the refunded government grant to any balance in unamortized deferred income. As you can observe, I have a balance of 16,000 rupees of unamortized deferred income. 20,000 will be first applied against this balance. That means 16,000 rupees of this balance will be eliminated. Getting it? And I'm still repaying 20,000. That means I'm still repaying additional 4,000. Additional 4,000 will be debited to the profit and loss account. Understand? Earlier you credited 4,000 to the P&L. Now you are reversing it. You are debiting it to the P&L. Your accounting entry is deferred income account debit 16,000. I'll write on the side. The accounting entry that you are recording is deferred income account debit. How much? 16,000. Profit and loss account debit. Okay. Profit and loss account debit 4,000 to bank account. To bank account 20,000. This is your accounting entry for the grant that you are refunding. in case if you have been following the deferred income approach, this is how the treatment will be done. You will first adjust against any balance which is lying in unamortized deferred income. If that balance is insufficient, or let's say there is no balance at all, then whatever is the additional deficit, that has to be routed through the profit and loss account. It will be debited to the P&L. And one more thing, if the government grant is relating to income, here also same accounting treatment will be given. If the government grant is relating to income, you should first check that do we have any balance in the unamortized deferred income account? If yes, adjust over there. Anything extra or the balance is not at all there, debit it to the profit and loss account. Just see. Earlier grant was treated as deferred income. This will be the treatment. And repayment of grant related to income, this is the treatment. It's a common treatment. First applied against any unamortized deferred credit recognized in respect of the grant. Do you have any unamortized balance? Adjust that. To the extent that the repayment exceeds any such deferred credit, or when no deferred credit exists, either it is in excess or this kind of a balance itself is not there, the repayment shall be recognized immediately in profit and loss account. You are supposed to debit the grant that you are refunding to the profit and loss account. A Limited has received a grant of rupees 10 crores in the year 2021-22 from local government in the form of subsidy for selling goods at a lower price to lower income group population in a particular area for 2 years. We are getting a grant of rupees 10 crores. We are getting this in the year 2021-22, and this grant is basically in form of a subsidy. Whatever products that you are selling, the government wishes that those products are sold at a discounted price by us to lower income group population. They are saying that you should sell goods at a lower price to lower income group population in a particular area. By reading this much, it is becoming clear that this government grant is not relating to an asset. This is a government grant related to income. We are given a government grant which is related to income. Okay. A Limited had accounted for the grant as income in the year 2021-22. You received 10 crores of rupees and you are recognizing that as an income. That means you are crediting 10 crores to your P&L. I do have a slight issue with this accounting treatment because this grant is for a period of 2 years. If the grant is for a period of 2 years, it should be recognized in your P&L over a period of 2 years. But we will solve the question, of course, the way they have given. They are saying A Limited accounted for the grant as income in the year 2021-22. Indirectly, they are trying to tell us that entire 10 crores was credited to the P&L. Although the right treatment in my view is that it should have been recognized in the P&L over a period of 2 years. Anyways, we will solve the way they have given. They say while accounting for the grant in the year 2021-22, A Limited was reasonably assured that all the conditions attached to the grant will be complied with. Okay. However, in the year 2025-26, it was found that A Limited has not complied with the condition, and therefore notice of refund of grant has been served to it. A Limited contested but lost in court in 2025-26, and now the grant is fully repayable. Entire grant of 10 crores of rupees that you had received earlier is refundable. How should A Limited reflect repayable grant in its financial statements ending 2025-26? First and foremost, we are definitely assuming that no error was committed by the company. See, this 10 crores that you had received, ideally it should have been transferred to the P&L over a period of 2 years, but we have credited entire 10 crores to the P&L in 21-22 itself. However, the refund notice is in 2025-26. By that time, see, even if I had followed a policy of transferring it to the P&L over 2 years, then I would have transferred first installment in 2021-22 and the second installment in 2022-23. Refund is happening much later. Okay, refund is happening much later. Hence, it is fine. Okay, We are saying that error was not committed, and even if error was committed, so what? By the time it is 2025-26, now the grant would have definitely got credited to the P&L, and now it is refundable. How shall we refund a government grant related to income? How shall we refund it? Tell me, what shall be the accounting treatment? Okay, we will treat it as accounting estimate. We will give the effect prospectively. All that is things are fine. What is important is this accounting treatment, right? Repayment of a government grant related to income. It should be first applied against any unamortized deferred credit recognized in respect of the grant. And to the extent that the repayment exceeds any such deferred credit, or when no deferred credit exists, the repayment will be recognized immediately in profit or loss. Getting it? In the case that they have given to us, we are going to refund the government grant. Ask yourself, do you have any balance of unamortized deferred credit? You received a government grant of 10 crores and entire 10 crores is already recognized in the P&L. It means I do not have any unamortized balance. If no unamortized balance is available or it is insufficient, then the government grant should be refunded through the P&L. The repayment will be recognized immediately in profit or loss. That is what we will have to do over here. This 10 crores that you are refunding in 2025-26, it will be routed through the P&L. Yes, the way they have drafted the solution, they are saying it has been assumed that the accounting done in previous year was not incorrect. I told you, na? You received this grant for a period of 2 years and you recognize entirely in 1 year itself. There is something incorrect over here, but we are assuming we have to solve the question the way it is. And that is the reason we are assuming that no error was committed by us. Okay, we will treat government grant that becomes repayable as a change in accounting estimate as per Ind AS 8. And we know as per Ind AS 8, the effect has to be given prospectively. Okay. Repayment of a grant related to income shall be applied first against any unamortized deferred credit recognized in respect of the grant. That's the description of what we had seen earlier. To the extent the repayment exceeds the deferred credit or when no deferred credit exists, our case falls over here. No deferred credit exists. The repayment shall be recognized immediately in profit or loss. Since the grant was already recognized as income in 2021-22, no deferred credit balance exists in the year 2025-26, and therefore repayment is recognized in profit and loss. Isn't it? What shall be your accounting entries? This will be our scheme of accounting entries. They say the first one, repayment of government grant account debit. Okay. To grant repayable. This repayment of government grant that you have created will be ultimately debited to profit and loss account. Okay, that's the reason it's written here. It's an expense. Ultimately, it will go to the P&L, right? 10 crores is to be refunded. I'm creating a liability for the grant repayable and then grant repayable to bank. 10 crores, 10 crores. I will repay the grant repayable to bank account. As I will repay the government grant, there shall be an outflow of cash. And that's the reason bank account is getting credited.